Prices in Southwest Florida are showing resilience to the economic turmoil and may actually continue to do so based on this report I'm going over today. So let's get started. Hey, for those of you that don't know me, my name is Rick Harrison and I'm a home buying specialist here in Southwest Florida. And on this channel, I bring you the latest tips, tools, and tours to help you decide if this is the right time and place to make your move to paradise. So if that thought's crossed your mind, you're in the right place. So subscribe and tap the bell to stay up to date on the latest information, keeping you ahead of the curve. All right, so this first report is from Bigger Pockets. I'm going to break down how this correlates to Southwest Florida and where many of you are actually living right now and thinking of moving to this area. Measuring state tax burden. Obviously, state taxes are a huge issue in a lot of areas that are seeing declines in population, and we're going to go through some of those today. So first, New York. Obviously, this is ranked number one for the total tax burdens, 12.47%. You have the property tax burdens, also an additional 4.3%. Income tax, and then you have the sales and excise tax. Out of the top five, New York's one of the major ones that we see mostly moving to the Florida area and Southwest Florida in particular. Then in number 6, we see New Jersey. We also see a lot of people coming from Minnesota, and then also Illinois. Many of you are coming from Chicago. That area, 9.38%. Florida has a 6.3% total tax burden. Out of that, 2.75 is the property tax, which is actually fairly comparable to a lot of other states. But income tax burden is obviously 0. And then you also have the sales and excise tax of 3.58. So that puts us down towards the bottom of the lowest tax states, which is a huge reason why people move here, because everything that you earn and make, you're paying back to either the state or the federal government or both. And in Florida, you only pay it to the federal government. So. All right, population growth and migration patterns. So we have a 3.28% increase over the last 2 years moving to the state. So let's take a look at some of those other states. You have Illinois here is a negative 1.8% population move. You have California, which is another big state that's been moving to the Southwest Florida area, negative 1.2. New Jersey is just a little under 0.5%. And then you have New York, negative 2.59%. So that's, again, over 2.5% are moving out of New York. And then we have, Minnesota, they actually had a slight increase, just barely a slight increase over the last 2 years of populations moving there. So overall, Florida is gaining quite a bit. It's one of the greenest states, as you can see. So it is one of the largest population changes from 2020 to 2022. Also, when we look down and break down why people are actually moving to Florida, 37% of people have the reason in the majority of moving to this area because of retirement. But then you also have family and lifestyle, as well as job as the next 4. So health and cost, those aren't really high reasons for people moving here. Outbound, why people are leaving Southwest Florida or just Florida in general. The biggest reason is family. So moving back closer to family, 45%, that's almost half the people who were polled. Then you also have the next largest category is jobs. So people are moving for family or jobs, which are 2 main reasons why people would probably want to leave a great area, right? People probably love living in the state and in the area and the lifestyle that comes along with it, but family is important. And obviously your career and what you do for work every day plays a large role of happiness in your life. Income, majority of the people moving into Florida are making more than $150,000 a year. Surprisingly, the top 10 states with the most inbound migration currently, Florida is not in the top 10 right now. We were last year and the year before. However, we are currently not. A lot of that may have to do with the fact that we had Hurricane Ian, which is affecting not only just the insurance industry, but also really the amount of people who want to move here for fear of another hurricane coming. So how did all of this data actually play an impact on home appreciation prices? Well, let's take a look here on the left-hand side, these left 2 columns, you can see the highest tax states. New York, the 3-year appreciation was still a large appreciation, 27%. New Jersey, 32%, Minnesota, 27%, Illinois, 28%, almost 29%. But then you take a look at the lowest on the other side here, lowest tax states, 3-year appreciation. Florida had 53.36% appreciation. That's a huge appreciation and almost one of the highest in these lowest tax states. So what does this mean for you as a buyer, a current buyer or future buyer? Well, For one thing, the home prices in Florida have been resilient to what's going on in the economy, whether it was the FTX crisis and that crash with crypto, whether it's been the SVB banking crisis and everything that's been going on since then with the banking sector, whether it's been the talk about a crash coming or the recession coming, home prices have continued to appreciate in this area. While they are not appreciating like they were over the last 3 years, it's around a 1% to 2% appreciation rate, they are still increasing in prices, and inventory is still very low compared to the demand that is existing right now in our market. So whether or not the home prices are going to crash in Florida remains to be seen. Again, nobody can predict what's going to happen with housing. I'm not here to say that home prices are going to keep going up, so you need to buy right now, or that interest rates are going to continue increasing, so you should buy right now. That's not why I'm here. I'm here to just give you both sides of the story. I know a lot of my viewers here watch other channels like Jason Walters, the Real Estate Mindset, Michael Bordenaro. There's a whole bunch of other people that I know a lot of you do watch, and a lot of them are doom and gloom and telling you that everything's going to crash and that you should wait and hold off. I do see a lot of their points, but at the same time, I want to present both sides of the information to you so that you can make the most beneficial decision for where you're at right now with your current situation and whether or not it makes sense for you to purchase right now or hold off. Again, you could be holding off for years. It took 3 or 4 years for the market to actually fully bottom out in 2008. So again, you could be waiting that long. Keep in mind, when you're renting, you're paying somebody else's mortgage all that time. And if it takes 4 years, that would be a pretty large down payment on a home. At the same time, we will have to keep an eye on the interest rates, which is what we're going to dive into right now. All right. So for many of you who watched last week's market update, I did go over the bond market, which for those of you who are new and not familiar, the bond market, usually the 2 and 10-year bond markets tell you where mortgage rates are going to be heading and by how much. So when bond market 10-year treasury goes down, mortgage rates usually go down as well. In this case, we were looking at the 10-year treasury last week, and I said it looks like we're in more of a channel, which if it is in more of a channel, it means that interest rates are going to continue declining. But I did also put out the possibility that this may be a declining or a descending narrowing wedge, which if that was the case, a narrowing wedge, it means that if there is a breakout in the bond market, those interest rates would actually shoot higher. So that's what it looked like last week. And now this week, we see that it did actually break out. So it was a descending narrowing wedge. It broke out. And now that we're above the 200-day moving average again, which means the mortgage rates are probably going to continue increasing right now for the short term. And that's all due to the inverted yield curve, which has been happening for months now. All right, mortgage interest rates, where were last week. We were at 6.59% on average. That's now up to 6.8% as of today. I did also make everything for the stats a little bit easier for people to see visually. So they're not looking at all the different numbers. You can see everything is in rows. It's nice and easy to comprehend. So new listings on the left, we had last week at 945. New listings this week, 929. So that's down 2%. Solds went from 778 to 857. That's up 10%. That's lagging indicator though. The pendings is the present and current indicator, which is the number of people who are putting homes under contract right now. That went from 1057 to 1062. Really no change there as far as percentages go. And then price decreases did actually go up 14%, which is a pretty large increase week over week, which means that prices are coming down. However, I'm boots on the ground here. I still know a lot of sellers are still being very unrealistic with their prices. They are trying to get prices that were, the peak prices back in June of last year. They're still trying to get those prices. So a lot of these price decreases are just unrealistic homeowners who thought they could get, the world still and haven't adjusted to the current market conditions, which are saying, about fair market value right now, instead of overpricing and hoping for a bidding war. Single families. So the latest breakdown in inventory. Single families, we gained 25 units this week. Condos, we gained 64 units. So we had a net gain last week of 123 of a net gain of 89. Still a slight increase, but we're not seeing, the huge gains that we saw several months ago where we saw 300 or 400 plus units week over week. Multifamilies went from 98 to 108, gain of 10 there. Pretty notable, but still not anything to really write home about. Foreclosures from 50 to 46, we lost 4. And then out of the cash sale, out of the total sales, 697 sold over the last 7 days, 394 or 56% of those were cash, and that's actually down a few percentage points from the week before. So we'll have to continue seeing if there are still a lot of cash buyers entering the market. Punta Gorda, Sarasota, new listings went from 686 last week to 681 this week, down 1%, really not much. Sold 685 to 669, down 3%. Pendings also down 4%. And then price decreases were up 4%, which is right in line with what's going on in the market right now. Inventory breakdown. We lost 4 single-family home units total week over week, and we gained 33. So we had a net gain of 29, which is compared to last week's net gain of 15. As you can see, the northern part of Southwest Florida is stagnant a little bit as far as inventory coming on, and people putting homes under contract. Multifamilies, we lost 3 here, and then foreclosures gained 5. Still nothing really, no big changes here. This is pretty typical for the market. Total sales, 583 over the last 7 days, 321 or 55% of those were cash sales. And that is actually an increase in cash sales by a couple percentage points for this area. So we've got a lot to keep an eye on, but not to worry. That's exactly what I do on this channel every week. So don't forget to subscribe. And if you have questions, let me know in the comments, or you can always call, text, or email me anytime. I'm happy to help in any way I can. And all my contact info is in the link in the description. Thanks again for watching. I hope to see you on the next video. But until then, stay safe, stay positive, and more importantly, stay free.